Good morning, everybody. Welcome to our latest webinar. This is on democratic finance. It's been quite a while since I chaired one of these webinars, so I'm just trying to get used to the tech all over again. So we will be, I suppose, ramping up our number of events, I think, over the next few months in terms of webinars. I think particularly in terms of this topic as well, it's a very important topic. Obviously, money, funding, finance is always an ongoing issue for social enterprises and third sector organizations. And we're always looking for new innovations within the social investment and funding landscape, and democratic finance is certainly one of those new innovations. So we're very pleased to have Pauline, Hinchion and Morven, Lyon with us today to come along and speak about this latest project. So I won't delay any longer. I will hand over to our speakers.
Thank you, Duncan. Hi everybody. As Duncan said, I'm Morven Lyon and I work for the Development Trusts Association Scotland, and I manage the Community Shares Scotland programme. I'll let my colleague Pauline introduce herself as well.
Hi, I'm Pauline Hinchion and I work for Scottish Communities Finance Limited.
Thanks, Pauline. So in terms of what we're going to look at today, is going to be a very quick introduction to local democratic finance. So that's what we're going to start off with. What do we mean by democratic finance? I'm going to then do an introduction to Community Share Scotland, the support that we offer, and just a little reminder about what community shares are with some case studies. Pauline's then going to take over and talk about Scottish Communities Finance, and community bonds, and then we're just going to finish up with what's next for the democratic finance programme. So I shall get started. So just a quick introduction to what we mean by local democratic finance. I like to think about it in these three categories. So supply, so where's the money coming from? Demand, where's the money going to? And what are the outcomes that we want to achieve? So in terms of supply, what this programme is looking at is funding and finances from a wider variety of preferably local sources. So as I'm sure you all agree, community enterprises and social enterprises are far too reliant on grant finance, on public funding, and I feel like there's an opportunity here to look at what are the other mechanisms. And community shares and community bonds are excellent examples of that. So we're going to go into a wee bit more detail today about those two mechanisms. And by local sources, we are talking about community members, so citizen investors, and we'll talk a little bit more about that. But we're also talking about local businesses and institutions investing into social and community enterprises. We want this money to be more affordable and more patient. So this is about funding and finance for social enterprises that is affordable and the enterprise itself feels in control of it and has a sense of ownership over that money. So the demand is community enterprises, social enterprises, that's where the money is going to go to. And what we're talking about is member-led organisations with a democratically elected board, and that the profit is then used to deliver wide social benefit. So what you guys all do. And then what's the outcome of this? We want to create more resilient and confident social and community enterprises. It feels very shaky at the moment, as Duncan was saying. So the aim is to create more resilient social enterprises. And as I said, social enterprises that are less reliant on grant income and high interest daunting loan income. And then the very, very key aspect of democratic finance is, I've said this already, but it's worth re-emphasising, that we want community and social enterprises to feel ownership over that money. We don't want it to be daunting. We want them to be in control and have a sense of pride over the funding and finance that they've got. And then an extra element is that we want to encourage more citizen investors to invest into community and social enterprises. So everyday folk have been given the opportunity to support local businesses. So Community shares. As I said, community shares are an excellent example of democratic finance. I'm not going to go into too much detail about community shares, but just a very quick overview of what it is. So it's a way to raise money, and it's a way to raise money for income generating activities and enterprises. It's a form of crowdfunding, so you're going out to your community and you're asking them to invest as individuals or organisations into your business. And what that person or that organisation receives is that they have ownership, so a share, a piece of the organisation, and they have a say in how it is operated and how it's managed. It's really important to say that community shares are an investment, so they're not a donation. So you're asking people to invest into your business, and you should give them the option at some point in the future to get their money back, and they might even get some interest on their shares as well, which we'll come to. Community shares are often offered in a time-bound campaign. So typically it's maybe 4 weeks or 6 weeks that the campaign would be open. And in that time period, you're trying to reach a specific target. So one that we've got live at the moment, for example, they're looking to raise 70,000 in a time frame of 6 weeks, just as an example. In terms of the types of things that community shares can finance, so as long as you have an income generating idea, so it has to be a business, and as long as the community are behind it, then community shares are hugely flexible. So our bread and butter is stuff like shops, pubs, community buildings, renewable energy, but we've also done housing projects, sports projects, food farming initiatives, music venues. So yeah, they're very, very flexible. I just thought I'd start with a case study just to kind of try and put it into reality. So this was a group that we supported last year. They're called Glengarry Forest Cabins, and it was a community-led tourism social enterprise. So their business is about creating off-grid eco cabins that people can come and stay in their community in the cabins. They have a real focus on environmental sustainability. So the building standard and the design had environmental sustainability at its heart. They raised 279,000 through their community share offer last year, and that came from 176 investors. And the majority of those were local people. And then the point of this social enterprise is that there's a parent charity called Glengarry Community Woodlands, so they own the woodlands, and the income from the social enterprise will provide a kind of sustainable source of funding for that parent charity to do affordable housing, climate action projects, crofting. And as is quite normal for a lot of our projects, they had a different minimum investment level for locals versus non-locals. So it was £25 minimum investment for locals and £500 for non-locals. And that's just really about ensuring that community ownership and that local people remain in control. That doesn't have to be the case for all share offers, but for this one, that was quite an important aspect for them. Couple of quick key facts. So community shares can only be issued by a community benefit society or a cooperative. So they are corporate legal structures that the Community Share Scotland programme can help groups establish. I'm not going to go into any detail about this today, but if anyone wants to talk about that or explore that, then please get in touch. As I've mentioned, but it's important to stress that anyone who purchases a share in your enterprise becomes a member of your organisation. And crucially, it's one member, one vote. So it's not one share, one vote. So if I invest £10 and my neighbour invests £10,000, we each get one equal democratic say at meetings, at the AGM, etc. Shares are withdrawable. So what I mean by that is you should offer your investors, your shareholders, the option to get their money back at some point in the future. However, the control of this sits with the community enterprise. So in practice, what tends to happen is in your share offer documentation, you would say, we aim to pay some withdrawals after 5 years of trading, and it'll be maximum 10% of share capital per year. So that's a kind of standard model. But it's the management committee have discretion over withdrawals, which is slightly, very different to bonds, which I'll let Pauline explain later. As I've also mentioned, investors can be incentivised through tax relief. So there's some tax relief schemes for the investor to get tax back on their investment. And sometimes interest is offered on the shares. So you might say to somebody that they can invest and get, say, 2, 3, 4, 5% interest on their investment. And community shares do attract further funding. We've got lots and lots of evidence of this now. So the Scottish Land Fund, the National Lottery, the Community Ownership Fund, for example, look upon community shares really favourably because it really demonstrates that the community are engaged and they're bought into the idea. So in terms of the story so far, so this slide's actually a tiny bit out of date. We're now at 60 community share offers launched, and that's been a total of 19 million raised through community shares so far, from almost 17,000 citizen and organisational investors. We've got a very big geographical split, kind of tending towards more rural areas, as you can see there. Sector focus, so just to give this in a bit of a sort of pie chart format, so a quarter of our share offers so far have been community-owned renewables. The next biggest sector is shops for us. Community-led tourism has been a really big sector trend over the past year, and almost weekly we get other inquiries from new sectors. There was a survey done last year by Co-ops UK, which is the kind of UK-wide body that does the kind of peer-to-peer regulation of community shares. And they issued a report last year looking at the UK-wide sector findings through community shares. And there was just some really, really interesting and strong stats and data that came out of that. So 92% of community share funding enterprises are still trading with strong membership engagement, which I believe the equivalent private sector stat is about 65% of private sector businesses endure. So it does create really, really resilient community and social enterprises if community shares are used. And I think that's just for the simple reason that if someone owns something, or if they have literally put their money into it and they can see it happening in their community, they're much more likely to engage and to be a positive influence over that enterprise. I've said this already, but just to reiterate that 40% of our share offers have been match funded by the Scottish Land Fund, and also the new Community Ownership Fund, or the new-ish Community Ownership Fund, 30% of those successful bids have been match funded by community shares. Direct action, so it's interesting that community shares are being used more and more for a diverse number of sectors, and I think it's because they operate in this unique market where it's often the kind of last resort to save an enterprise. So the private sector wouldn't work. There's maybe no one individually in that community who wants to take it on, but because profit is not such a driver in a community benefit society, in a share offer, then it's a really, really good structure to take direct action and to tackle problems and to take on assets that might otherwise be lost. And then just the final point in this slide is now there's this incredibly strong peer-to-peer network in the UK around community shares. So they are unregulated, so they're outside of the Financial Services Marketing Act. So what that means is that there has to be a very strong peer-to-peer regulation and network. So there's lots of sector-specific expertise. Co-ops UK run a standard mark process, and they also have a practitioner training programme that we're part of as well. And then a final couple of slides. So just to say that the share offer campaign is underpinned by what we call a share offer document. So there's a couple of examples of share offer documents on the screen there. And this is often a kind of 10-page document, can be physical, can also be online, which is the call to action. So this is the document that goes out to the community to say, this is our idea, these are the finances, these are the community benefits, please invest in our idea. It'll have the share offer key facts, so stuff like the minimum investment levels, what the target raise is, what the key dates. Some of our groups use platforms, so there's various online platforms that you can use to run your share offer, or some groups just do it themselves or DIY through their own websites. We've had lots of fun launch events, so physical launch events. It's great to see those happening again after COVID. And just to say as well that we have a micro grant available to cover the costs of the share offer. Two final slides. Wanted to end with an upcoming share offer. So this is launching on the 24th of October, so at the end of this month. So this is the Scottish Cooperative Discovery Centre in West Calder. They are looking to raise 350,000 through community shares, which is part of a much bigger funding package. I think it's a £6 million project. And what they're doing is that they are taking on a former bakery building within their community to create an interactive heritage centre, which is celebrating the Scottish cooperative movement. So it's pretty unique. There's nothing like it in Scotland. They are going to offer 4% interest on their shares. And just to say, so this project, and this happens quite a lot in Scotland, is a collaboration. So in the same way that Glengarry Forest Cabins was, it's a collaboration between West Calder and Harborne Community Development Trust. So that's the kind of parent charity. And then you've got the Scottish Co-op Discovery Centre, Community Benefit Society, which is the enterprise that's going to run and lease the building, so run the enterprise within the building. And we've got a specific set of kind of model rules that can help facilitate that. That again, I'm not going to go into detail on, but get in touch if that is relevant to what you're doing. I think I could be done. Oh, just who we are. Maybe I should have started with this. So as I said, I'm the programme manager for Community Shares Scotland, which is a programme of the Development Trust Association Scotland. So our remit is that we raise awareness of alternative finance models, so clearly with a specific focus on community shares. We deliver training, workshops, events, so such as today. And then 80% of what we do is we deliver direct hand-holding support to communities who want to do a community share offer. And what that looks like is early stage support from the programme team. So this is the three of us here. So myself, my colleague Nick and my colleague Katie. And then we can offer up to 6 days. Sometimes it's more of tailored free consultancy, focusing on things like business planning, community engagement, governance, and the share offer document that I mentioned. And just to say again that we do have this small grant programme, so up to £5,000 that groups can apply to for all those additional costs, so things like the launch event, marketing, graphic design, any specialist tax advice that might be needed. And at the moment, we are funded by Scottish Government, National Lottery and Acorns to Trees until next spring. So yeah, at the moment, we're fully funded, so we can provide the support for free. Okay, not sure how much I've gone over time, Pauline. Sorry if I have. I'll hand over to you.
Cheers, Morven. I don't mind you going over because you do a lot of heavy lifting explaining what democratic finance is, so I don't have to go into it. Hi, everybody. My name is Pauline Hinchion. I'm the Director of Scottish Communities Finance, and I'm here to talk to you about community bonds. Morven is going to be my assistant, and she's going to turn the slides for me. Thanks, Morven. So about Scottish Communities Finance Limited, we actually are a community benefit society, which means we're registered with the FCA. And what we do is we actually work with third sector organisations to raise affordable, patient, repayable finance from within their communities. That's one of the differences between ourselves and the community shares and Morven's team, which is basically that there's a lot of third sector organisations out there that aren't BENCOMs and they don't want to convert to BENCOMs. So there might be a SCFL or company limited by guarantee or a KIC or whatever. And they actually can't engage in democratic finance directly. So we're here for them to be able to come to us, and then we can work with them to raise the finance that they need. So we kind of lend them our registration with the FCA. And we provide free support to organisations interested in doing community bonds. So again, like community shares, business planning, due diligence, making sure that the enterprise stack up. And basically that comes to free because we get some money from the Scottish Government. Next slide, please, Morven. So again, just to reiterate, what do we mean by community? Of course, it's geography and place, but can just as easily be, if you're a sports organization, it could be maybe your membership or associations. It can be your customers and your clients. You know, it could be the parents of your clients, if you're a childcare facility, for example. It can be all your stakeholders, so your volunteers, your trainees, you know, people in the local authority, your staff. It can be your suppliers. Basically, what we mean by community is anybody who has an interest in what you're doing, making it a success, and actually has you know, is committed to supporting you to do your work. So one of the things that we do, first of all, with community bonds is we sit down and we try and determine, you know, who are the communities that might be interested in this, because often organizations have more than one community. And we sit down, we do that beginning, and then we kind of tailor our messages to make sure that we hit each of those communities and what their interest is and what you're doing specifically, in order to kind of pull them into that community and give them a sense that it's in their interest to support you. Next slide, please, Morven. Okay, so Morven explained a lot about what democratic finance is. And so she talked about it has to be a trading income, or sorry, it has to be a trading enterprise that generates income. You know, you have to produce a prospectus or a bond offer document that sets out how much money you're looking for and what you want to do with the money. And also she explained that actually, you know, you can blend democratic finance and community bonds with other forms of grants or other forms of investment. But ultimately what it is a vehicle for securing repayable long-term patient finance. Long-term could be anything from 3 years to 11 years to whichever is required by the actual proposition. But the important thing here is that it is repayable. As I said, organizations don't need to be a BENCOM. They can convert to a BENCOM if they wish, or they can add a BENCOM trading subsidiary. I think that was the example that Morven just gave. But you actually don't need to do it in order to raise, through community bonds, in order to raise investment. The crucial difference between community shares and community bonds is that your investors have no ownership or governance over the entity. You're literally just taking their money. So it's very much a form of debt, whereas community shares is very much a form of equity, where people actually own and have a membership stake in the actual business. Here, the investors just lend you their money. As I say, the prospectus is required. Bonds, like shares, cannot be sold. There's no secondary market. So if you buy a bond, you think, oh, I'm going to sell them in the bond market tomorrow. I think you'll find you'll be bitterly disappointed. They can't be sold. They can't raise in the price of a bond cannot change. So if you buy a bond at £25, it'll stay at £25. And I think the difference between community shares and ourselves is that there's a fixed repayable date. So you will say to your community, we would like to borrow money from you. We're going to give you X percent, 4%, but we're going to pay you back your interest and your capital in 5 years' time or 7 years' time. And at that stage, the anticipation is the trading activity has got going, the money, they've reached capacity, they're bringing in the money, and therefore they're able to repay their investors. That's a really important point, because we want them to come back in to the next community bond, the next democratic finance raise that somebody else in the community actually might want money for. So it's really important that we commit from the beginning to repay them their money. It can be suitable for small or large. You know, we've done, both of us, shares and bonds, you know, we've done 17,000, we've done 200,000, we've done, you know, 1.5 million. So there's no fixed concept of, oh, we don't do any investment democratic finance raises less than 10K or less than 100K. It's whatever your community needs. That's fine with us. They're suitable, bonds are suitable for most types of economic development. So to give you an example, the one Morven and I were working with over the summer, you know, they used community shares to buy the assets, and they're using community bonds now to develop the trading arm. So they blend together quite well. and they've also got other sources of funding to pull together a complete package. And there are fees, and the fees are directly related to the direct costs of doing the community bond offer. So not so much to our time, but if somebody wants to produce a video, or if somebody wants to do a really expensive marketing campaign, that's going to cost money. We will do it, but then we will invoice that community for the money. They can add it into the raise. They can say we're looking to raise 20,000, but 2,000 of that is to promote the bonds, or we can do it ourselves. They can do it ourselves to try and be economically and sustainable. I think you can do more than one bond. So the example I'm going to give you later on, I'll explain a little bit about that. You can also offer rewards with bonds. So, you know, if you're a bondholder, you know, you get 5% off what you buy in the shop, or you will get, you know, free ticket to the theatre every year on your birthday, you know, just kind of pulling people in as a client and a customer base from the very beginning. You know, if you're doing a chocolate factory, you'll say things, we'll send you a box of chocolates on your birthday. You know, they're tasting the product, they're getting a real experience of it, and you're hoping they'll come back, because actually you need them to come back to increase your trading. So there's a vested interest in kind of pulling them into what you're doing beyond just becoming investors. And investors need to really take an interest in the organization's success. And I'll explain that later on, because I have a slide showing how that translates into investor engagement. I think the important thing here is that community bonds and us, SCF, we cannot prioritize the investor returns over the security of the trading enterprise, the community enterprise, the social enterprise. So even if you were trying to raise 100K and somebody came along and said, I'll give you 50K, but I want 7%, but we've run the figures and the most you can pay is 4%, then we have to say we can't do that, because actually, potentially, the enterprise can't afford 7%, and therefore it's at risk of its sustainability over the long term. So this is very much about money that is affordable by the community enterprise. Next slide, please, Morven. So I mentioned about community bond investors and pulling them into a proposition. So we did a little bit of survey work with investors, and we had a 45% success rate from 2 groups of community bond investors, and they represented 228 individual investors. That's not to say they were all people. Some of them were organizations, but when we mean individual investors, we mean applicants and people who applied for community bonds, but most of them were individuals. So 88% of them was desired to invest locally, and 83% of them wanted to invest for social or in environmental good. 76% of them had never invested locally before, which is really interesting, because it implies that maybe they're not being given the opportunity, and obviously the Democratic Finance Programme wants to change that. 55% have never invested socially. I think what is interesting is, after investing, 58% of them say they're now more interested in the organizations that they invested in. Really important. You pull them in, tend to use volunteers. They're taking much more interest in the activities you're doing, the social activities you're doing. But also, I think they're interested in the point of view of they want to buy your stuff, or they want to engage in your trading activity, because that's the only way they're going to get their money back, quite frankly. It has to be a success. But also, just to reiterate that, you know, 80+% of them thought the bond information was easy to understand. That's really important, that we don't bamboozle them with financial jargon. Most of the people who engage in community bonds actually, or people like us, we don't consider ourselves to be high net worth individuals. We're not big investors. So we can't bamboozle them with science, but on the other hand, we do have to make clear what they're paying for when they invest and what's going to happen, and also that their money is at risk. But then I would argue that if you go into your bank today, you'll see a big sign that says your money's at risk. So there's nothing particularly different there, but as Morven says, you know, investors have no recourse to the financial ombudsman. So if things go wrong, the risk lands with them. And 81% said they would invest again. Morven. So my final slide, I think my second final slide really is about a case study, just to give you an idea. So this was when Linlithgow Community Development Trust. They were very aware that they had a renewable source, as in they get more sunshine, above average sunshine than anywhere else in Scotland, and they wanted to use that locally, so locals could actually avail of that. And we did a very small pilot with them where they went out to community facilities, sports facilities, and we basically, who were interested in net zero but didn't have the capital to actually put the solar panels on the roof. And so we worked with Linlithgow Go Solar, which was the trading arm of the LCDT, the Development Trust, to raise the money to put the solar panels for the pilot phase. Very quickly, other community facilities came on board. So we did a second pilot. And then finally, we're now going to be doing a third phase, we hope. It's in development, and that's going to be quite a large scale up from the previous two phases, and it's going to be over multiple communities. And I suppose just to reiterate what Morven was saying about citizen investors, you know, for us, this is what we're trying to create. We want Scotland to be a nation of citizen investors. We want everybody to realise that they can invest a very small sum of money in their local communities to make things happen in that communities. And actually, it's a much more empowering model because it puts control, as Morven says, it puts control into the community's hands to do the stuff, to raise the money as much as they can locally, to make the changes that they want to see happen and for their aspirations for their communities to be realised. Morven, final slide, I think. So basically, just to give you an overview of the difference between community shares and community bonds. So in community shares, the legal structure has to be a BENCOM or cooperative structure. With community bonds, you can do it if you are a BENCOM, but actually the way we've set up is if you have another legal structure and you don't want to convert to BENCOM or actually create a new BENCOM, then you can borrow our registration. Admin heavy, you know, this at the end of the day is democratic finance, it is crowdfunding. So, you know, we have to do a lot of work because you're asking people to invest in expectation of the return. So, you know, we have to make sure that the business plan is right, that the financials are right. The social media campaign to pull in the investors can be onerous. It's within a fixed time period. So, you know, this isn't something that you can do, put a video up and say, right, let's just wait for the money to come in. There's a lot of work that has to be done. And usually we allow for about 6 months before we even launch the community bonds offer to make sure that all of the information is in place. In terms of the investors, in the case of community shares, the investors have voting rights and they have ownership rights. In the community bonds, they don't. It's a debt, so they're just lending you their money. Investors get their money back in both cases. It's a bit more complicated with community shares because the enterprise has a much more control over when they pay back and when they pay back their shareholders. Whereas in the case of community bonds, there's a fixed maturity date, 5 years from the 1st of April, we'll give you your money back. And do investors receive interest? In the case of community shares, it's optional. And I know in the past that they've done 0% in community share offers. But right now, with the way interest rates are going, certainly in the case of community bonds, and because we want to create that sense of people being an investor, we like to give in return. It's not a market. We're not here to beat the market. We're here to give a return that reflects the long-term sustainability of the project and respects the fact that investors are also getting a big social and community return. I think that's me, Morven. Thank you.
Thanks, Pauline.
That's great, guys. Really, really comprehensive there, and really gives us kind of a feel, a bit of a flavour of the different types of options that are available in this kind of broad democratic finance environment. So,
sorry, I've just realised we've got the last slide. It's actually probably quite important to go over. Do you mind if I just quickly do this? I know we're really running out of time, but this is in terms of what's next for the programme, and a bit of a call to action to you guys on the call. So at the moment, this is a pilot project, so it's a partnership approach between Scottish Communities Finance and DTAS. We have a small amount of funding for it, but the idea is that this develops into a fully funded, full-blown programme in due course. So at the moment, we're in this pilot phase, which is about delivery of community shares, continue with that. We're looking in community shares in harder to reach areas, community bonds, and we still do light touch donation-based crowdfunding support as well. So in terms of what's next, so we're kind of researching different models, and the plan is to get to a point where we can offer direct holding support through our programme for these models. So things that we're looking at on top of shares, bonds and crowdfunding are legacy and philanthropic giving. So not the Foundation Scotland approach of being the kind of a middle person, but connecting high net worth individuals directly to social and community enterprises in a community and facilitating that bit better, because we believe that doesn't happen that well at the moment. Further opportunities for local loans and underwriting, so whether that's through a local authority or another institution, but how can communities move faster to take on assets if there is an opportunity to get better, more patient, affordable local loans or underwriting facilities. We're going to do a little bit of research into community lotteries and whether they could be used, for example, as a one-off thing to do to purchase an asset. We're also doing research into common good funds and assets and how well community and social enterprises access them, because again, we don't think they access them well enough at the moment. And then finally, there's a huge opportunity within the community, or within the renewable energy sector at the moment, both in terms of community benefit funds coming into communities and being used fairly to fund social and community enterprises, but also crucially an opportunity for community shared ownership of developer-led renewables, and that option for that ongoing future long-term revenue for that to come back into communities and stay in communities for that wealth to circulate locally. So if any of that is like, cool, that sounds interesting, that sounds great, I've got a case study, then please get in touch with Pauline and I, and we can chat to you.
Can I just say that overall, the future of democratic finance is trying to find all the other sources of money within communities, money that exists, and how do we bring that to the attention and for the use of community and social enterprises, so that actually it makes it easier to do what they want to do. And one of the things that I think is most exciting is, we're actually looking at ways in which local people can leave some money in their wills, for example, to a local organization. Maybe they've used your community centre. We know that there's the big charities do a lot of work around this, but how can we free up maybe some money to bring that into the fore? So think about it in terms of that way. How do we mine the existing resources, financial resources, that we can bring it to the fore so that it can help you do what you want to do? That's us.
That's us.
That's brilliant. No, thank you so much. Sorry for interrupting there. Sorry. Final.
Good.
So what we'll do is we're running slightly behind, which is fine. We're just going to run by another 5 minutes. That's all good. Does anybody have any questions at this stage? Anyone like to put their hand up and ask a question? Please feel free. Or I have to ask the first question. Anybody? Oh, Rini, do you want to just unmute and ask your question?
But I take it the slide deck is going to get sent out to us after the event, hopefully.
Yeah.
Good. So we are finally, Pauline, after many years of talking about it, now own the site that our Market Garden operates on. We bought it from the largest landowner on Butte, and I'm now in the process of actually moving forward with building the training centre. So we've applied for a large amount of grant money. I'm going to be talking to the big lottery, and we're working through the final stages of the business planning process. And I suspect that we may have a gap in the funding and that's why I've joined the call today. Is to I know we've talked a few times, Pauline, about community bonds. My board are still not convinced by this approach as part of the mix. So we are limited by guarantee, registered charity, and we're a subsidiary of a community benefit society. So the Fine Homes is the community benefit society. We are the subsidiary of them. What would you say to convince my board that this is something they should be investigating to make sure that the Bute Produce Training Centre gets over the line? Because as I say, I suspect that we will have a bit of a funding gap.
I'll just start on this. Rennie, I'm delighted to hear you're finally at the starting point in terms of your aspirations. I think, you know, you wouldn't be the first where the board are concerned in terms of taking on any form of, you know, investment. It is a new thing for a lot of organizations, but I would say that, and one of the things certainly in terms of us, I always go and see the board eye to eye. I explain to them what this is about. I take their questions, and I really need to come away convinced that they understand what they're taking on. So that would be really useful. And then the second thing is, I think, and Morven maybe pick up on this a bit more, as well as that we have so many examples we can show. Maybe they're not exactly your project. We've so many examples that can show that actually communities do engage, actually. And as even Morven said, the foundations or the Plunkett report, you know, showing that actually it is a sustainable model, but you have to get it right. You know, you can't say, I'm looking for £1 million, I'm going to pay it back 3 years. And by the way, we won't start trading for 4 years. Balance has to be right in terms of when do we realistically expect to start trading? When do we expect to actually make enough money to be able to start paying back the actual investors at a certain point? So there's a lot of thought has to go into it. The interest rate is important. How much genuinely can you afford to pay? So I think we have a lot of understanding, knowledge, experience, case studies. But the important thing is the board has to feel a part of it, and they have to take ownership of it, really. And I can do whatever I can to actually assist you with that, including speaking to them and going and seeing them and answering the questions they might have.
Yeah, I would totally agree with that. I think maybe just to reiterate that it is 100% not our role to convince groups to do this if it's not appropriate to do so. So I would actually never go in selling community shares from the off. As Pauline says, we go along, we look at your business model, we look at your finances, we look at your community, and we have just a really, really good in-depth conversation about, is this an appropriate way to raise finance? And are shares more appropriate because it's ownership, or bonds more appropriate because it's not, for example? What are the other ways you could raise money that could complement democratic finance? So yeah, I think it's the classic, we'll just come and talk to your board and we'll work it through. And it may be that democratic finance isn't the best option, and that's actually a good outcome for us as well. As Pauline said, this is about what is the best, most affordable, patient source of capital for your specific enterprise.
Thank you.
There's a question in the chat from Wendy asking, do we have examples of any organisations using both community shares and community bonds at this stage?
Yeah, Pauline and I are working on a couple of cases at the moment. So some of them might have a launch. I won't mention names yet, but we're working with a shop at the moment where what they're doing is ownership is really important to them. They want it to be a community-owned shop, so they're going to use community shares first of all to purchase the asset. It's a small community, so it may not be that they can raise all of the money through shares, so they're then going to potentially do a top-up community bond offer to raise that extra bit of finance. And one thing that's sometimes important in communities is anonymity, particularly if people want to invest a large amount of money. So that's where Pauline's model comes in quite well, because as she's mentioned, she is the middle person in terms of holding that information and provides a bit of a buffer there. Yeah, Pauline, do you want to say anything else on that?
Yeah, no, just I think it's a really good point in the sense that they come together and they blend quite well. And I kind of maybe just did a one-liner earlier on this summer. We did another one where they use community shares to buy the asset, and are now using community bonds to actually develop it further. Because, you know, there's only so often you can go out to your community shares owners and your membership, and it may be you've gone out 3 times already. You have a new development phase, and it may be you feel actually we need to pull in new investors, but we don't necessarily want new members. We don't want new owners. We just want money, exactly. And that's where maybe community bonds can come in. So they come together very well. I think the important thing is the community shares is an excellent model in terms of making sure that the asset or the community enterprise actually is kind of owned and managed and governed locally. That's the best way of doing it, because actually it roots the ownership in that community. The community bonds is very much, who cares if the person lives in America, I just want their money. Sorry if that, but that's the reality of it, you know.
Absolutely. Anybody else like to come at this stage with any questions? When do you want to ask anything else, or anyone else has any questions?
Great, thank you for answering that. That gave us a very clear response.
I think the important thing that you could take away from all of this, everybody on the call, is that there's no one model. It's very bespoke to each organization. It's very bespoke to what they want to do and what phase in the development they may be. And actually, you know, there's no sense in which we prescribe a certain scale, a certain size. We listen, we recommend. If it's not for you, we walk away, and that's perfectly fine. But certainly, you know, there won't be an exact identikit model, because each community is different. The size is different, the offer is different, the amount they want to raise is different. The interest rate, like for now, is completely different to when the Bank of England interest rates were 0.25%. You know, so everything changes and everything is bespoke, including the prospectus. So I think that's the important thing to remember. It's what's for ye, not it's suitable for ye, rather than any kind of notion that there is a one-size-fits-all model.
And I guess it's really good that we now have, you know, these democratic finance models, you know, as part of our, you know, wider social investment and funding landscape. I think it's really important. I was thinking, so if you're a small organization, what advice would you give to a small organization that's thinking of, you know, just reviewing their funding and finance, looking at these social investment models? What kind of advice would you give them in terms of, you know, it's quite complex, basically. I think what could they do? Where would they start?
Just get in touch with us. I think that this is what Pauline and I do on a day-to-day basis. We sit down with organizations and we just have these conversations. So don't do it alone, just get in touch with us.
But I think the future, just talking about the program and the future of the program, you know, we are looking at things like, how do we make this less risky for communities? You know, how do we, you know, what is the role of philanthropy in taking the risk? So if there's another COVID and your plans don't go according to, you know, your business plan, you know, we don't really want that money, that community to lose the money. So what is the role of other agents in actually then paying individuals back, because we want the money to stay in the community and we don't want them to lose it? And we're also looking at things like, you know, what is the role of community common good funds? We know they exist in theory, they're for the benefit of the community. How do we pull that in? How do we pull in more generic, for example, people leaving money in a will, and how does that blend into a grant, trading income, investment? And I think the excitement of all this is actually what we're trying to do is make it, give social and community enterprises as wide a scope to look at their financial modeling. You know, it's not enough to say we can't get a grant, we're not going to do that. You know, how do we allow you to do that if there's only half the grant, or if there's no grant, in a way that you're very comfortable with, that could pull in other grant sources and could pull in other investors. So, you know, we're really trying to make it easy for communities to kind of do what they want to do, using investment, but not all investment. So that's what I would say, Duncan, because actually, if you don't even have an overdraft, this stuff is frightening. We get that.
Yeah.
You know,
Could be overwhelming.
and it's not about going from 100% grant to 100% investor either. It's actually about somehow, you know, looking at where you are, what you've done, and actually how much you need. And often the cultural barrier is just do a very small raise, 5K, 10K, just to get your brain going in terms of what does that mean, and familiarize yourself with taking investment at a very small level rather than going for it. But a lot of community groups, and Morven will probably, a lot of community groups go big because they get an opportunity, you know, something is happening, like this group we're working in, the only post office and shop on the island is going to close. So they have to do it at a certain scale.
Absolutely. I think it's worth bearing in mind as well, obviously this is part of a wider policy agenda of, you know, community wealth building, all these kind of things. So it's obviously fits very, very well into the community wealth building agenda. And obviously finance and funding as part of that is crucial. So we're running a bit over time, but if anybody's got any further questions, you can get in touch with me and I can pass the questions on to Morven and Pauline. We'll be, as I said, happy to answer any questions. This will be recorded and posted on our YouTube channel as well for anybody who missed the beginning or anybody who couldn't make it today. Yeah, so thank you so much to Pauline and Morven. I think that was really, really enlightening. And I think just a really, really important conversation as part of the community wealth building agenda, etc. So yeah, brilliant.
Thanks, Duncan, and thanks to everybody who turned up. We hope you found it interesting. Even if you just say, well, that's not for us, that's fine.
I just got my email address in the chat as well.
Great, thanks, Morven. So yeah, thanks for coming along today, everybody. We've lost a few people just now, but as I say, we're recorded and posted on YouTube, so you get all the chat. So have a good day, everybody, and see you soon.
Thanks, everyone.
Bye.